2025 U.S. Stock Market Strategy, Your Ultimate Guide. Hey everyone, welcome back to the channel. It's Chloe William here, your go-to guide for all things finance. And you know what? 2025 is shaping up to be a really interesting year for the U.S. stock market. We've got a lot to unpack, from the Fed's moves on interest rates to the hottest sectors you need to have on your radar. Whether you're already a seasoned investor or just starting to dip your toes into the market, this video is your ultimate roadmap to navigating the year ahead. We're talking actionable insights, my personal strategies, and the tools you need to make smart, informed decisions. So grab your favorite notebook, get comfy, and let's dive right in. Don't forget to hit that like button and subscribe to stay updated on all the latest financial tips and tricks. All right, let's kick things off by setting the stage. As we look ahead to the year 2025, it's crucial to understand the landscape we're navigating. What's the overall vibe of the U.S. stock market as we head into 2025? It's a mixed bag, with both challenges and opportunities on the horizon. Well, picture this. We're emerging from a period of high interest rates, a necessary evil to combat inflation, right? These rates have been a double-edged sword, curbing inflation but also slowing down economic growth. The good news is, the Federal Reserve has hinted at a potential pause in these rate hikes. This pause could be a turning point, signaling a more stable economic environment. Now, why does that matter to you? Well, it directly impacts your investments and financial planning. When interest rates stabilize or even drop, it often gives a little boost to the bond market. Bonds become more attractive, offering better returns compared to the high-rate environment. And guess what? That positive energy can spill over into the stock market, potentially leading to some exciting opportunities. Investors might feel more confident, driving up stock prices. Now let's talk tech. You know I love a good tech stock. The tech sector has been a powerhouse, and it shows no signs of slowing down. And guess what? Advancements in artificial intelligence, clean energy, and semiconductors are still fueling the tech sector's growth. These innovations are not just trends, they're shaping the future. But remember, diversification is key. It's tempting to go all in on tech, but spreading your investments across different sectors can mitigate risks. While tech is exciting, it's always wise to balance your portfolio with other sectors. This strategy helps cushion against market volatility. Keep an eye on consumer staples, those everyday essentials people always need, and healthcare. These sectors provide stability and steady returns. These sectors tend to hold their own even when the market gets a little bumpy, making them great defensive plays. So, as we move forward, stay informed and stay diversified. Now, let's talk about the trends and themes that are going to shape the market in 2025. As we look ahead, it's crucial to understand the driving forces that will influence the global economy and investment landscape. These are the forces you want to align yourself with for maximum growth potential. By staying ahead of these trends, you can position yourself to capitalize on emerging opportunities. First up, we've got the unstoppable force of artificial intelligence and automation. These technologies are revolutionizing industries, making processes more efficient and creating new business models. Companies at the forefront of AI innovation are going to continue to be major players. They are not only enhancing productivity, but also driving significant advancements in various sectors. And it's not just the big tech giants. Keep an eye on those emerging startups that are disrupting the game. These nimble innovators often bring fresh perspectives and groundbreaking solutions to the table. Next, let's talk about the future, and that future is green. The shift towards renewable energy sources is not just a trend, it's a necessity for sustainable development. Clean energy and sustainability are more than just buzzwords. They're megatrends driving massive investment. Investors are increasingly focusing on companies that prioritize environmental responsibility. With governments around the world offering incentives and pushing for a greener future, clean energy stocks are poised for some serious long-term growth. Policies and regulations are aligning to support this transition. Now let's shift gears and talk about you, the consumer. Understanding consumer behavior is key to identifying lucrative investment opportunities. Understanding how people are spending their money is crucial for spotting investment opportunities. E-commerce is still booming, driven by convenience and the increasing shift to online shopping. Experiences are back in a big way, as people seek to make up for lost time and create memorable moments. This resurgence is opening up new avenues for growth in the travel and leisure sectors, and the health and wellness sector is on fire. With a growing focus on personal well-being, consumers are investing more in fitness, nutrition, and mental health services. Pay attention to these shifts in consumer behavior. They can provide valuable insights into where the market is heading and where the best opportunities lie. And finally, let's not forget about the bigger picture: global diversification. Investing in a diverse range of markets can help mitigate risks and enhance returns. Don't limit yourself to just the US market. There are numerous opportunities in international markets that can offer substantial growth. Emerging economies, especially those recovering strongly from the pandemic, can offer incredible growth potential. By diversifying your portfolio, you can tap into these dynamic markets and maximize your investment returns. Chapter 3. All right, it's time to get tactical. How should your investment portfolio look in 2025? Think of this as your personalized roadmap to financial success. First up, let's talk growth. I recommend allocating around 40 to 50% of your portfolio to high-growth sectors like technology and biotechnology. These are the companies that have the potential to skyrocket in value. But remember, balance is key. To counterbalance that growth potential, dedicate about 20 to 30% of your portfolio to dividend-paying blue-chip companies. These are the steady eddies of the market, providing stability and a nice stream of passive income. Now, let's talk about safety nets. Allocate around 20% to bonds and cash. This acts as a cushion to protect your portfolio from those inevitable market ups and downs. Focus on short to medium-term bonds for the best balance of risk and return. And finally, for those of you who are feeling a little adventurous, consider setting aside 5 to 10% for alternative investments. This could be anything from real estate investment trusts, REITs, to commodities, or even cryptocurrencies if you're comfortable with a little more risk. Chapter 4. Let's be real. Timing the market perfectly is about as likely as winning the lottery. The unpredictability of the market makes it nearly impossible to always buy low and sell high. But that doesn't mean we can't make informed decisions to minimize risk and maximize returns. By staying informed and using strategic approaches, we can navigate the market more effectively. One of the most important things you can do is keep an eye on the Federal Reserve's announcements on interest rates. These announcements can signal changes in the economic environment that could impact your investments. They have a huge influence on market sentiment, so understanding their moves is crucial. When the Fed raises or lowers rates, it can cause significant market reactions. Next, stay informed about earnings reports from major companies, especially during the first and third quarters. These reports provide a snapshot of a company's financial health and future prospects. These reports give you valuable insights into how businesses are performing and can help you make smarter investment choices. By analyzing these reports, you can identify trends and make more informed decisions. Now let's talk about a strategy I love: dollar cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of the market's condition. It's a simple but powerful way to reduce the impact of short-term market volatility. By spreading out your investments, you avoid the risk of investing a large sum at an inopportune time. Instead of investing a lump sum all at once, you spread out your investments over time. This approach can help smooth out the highs and lows of the market. And remember, diversification is your best friend. By spreading your investments across different assets, you can reduce your overall risk. Don't put all your eggs in one basket. Diversifying your portfolio helps protect you from significant losses if one investment performs poorly. Spread your investments across different sectors, asset classes, and even geographic regions to reduce your overall risk. This way, you're not overly exposed to any single market or economic event. And finally, always keep some cash on hand. A cash reserve acts as a safety net and provides liquidity. Having a cash reserve allows you to take advantage of unexpected opportunities that might pop up. It also gives you peace of mind. knowing you have funds available for emergencies or sudden investment opportunities. Chapter 5. All right, before we wrap things up, let's talk about the tools and resources that will give you an edge in the market. Knowledge is power, right? First up, let's talk apps. Robinhood, Fidelity, and Seeking Alpha are my go-tos for research, trading, and staying up to date on market movements. They're user-friendly, packed with features, and make investing accessible to everyone. But don't underestimate the power of good old-fashioned news sources. CNBC, Bloomberg, and Reuters are my daily must-reads for staying informed about global events that could impact the market. And if you're looking for timeless wisdom and a deeper understanding of investing principles, you can't go wrong with The Intelligent Investor by Benjamin Graham. It's a classic for a reason. And finally, don't underestimate the power of community. Join online forums, Facebook groups, or Reddit threads dedicated to investing. It's a great way to connect with fellow investors, share ideas, and learn from each other's experiences. That's a wrap on today's video. I hope you found it insightful and feel ready to tackle the US stock market in 2025. Remember, it's a marathon, not a sprint. Stay informed, stay disciplined, and never be afraid to ask questions. If you found this video helpful, give it a big thumbs up and share it with your friends who are also looking to level up their investment game. And don't forget to subscribe to the channel for more financial tips and strategies delivered straight to your feed. Now, I want to hear from you. What's your #1 investment goal for 2025? Drop it in the comments below. Let's start a conversation. Until next time, happy investing.